Welcome to another episode of Money Matters. In today's video, we're diving into the exciting world of investing in stocks. If you're a beginner looking to dip your toes into the stock market, this video is for you. We'll break down the essentials, provide valuable tips, and guide you through the process step by step. So, let's get started on your journey to becoming a successful stock investor. Before we dive into the details, let's define what stocks are. When you buy a stock, you're essentially buying a small piece of ownership in a company. Stocks are traded on stock exchanges, such as the New York Stock Exchange or Nasdaq. Investing in stocks can offer the potential for long-term capital appreciation and the opportunity to share in a company's success. Now, let's talk about why investing in stocks can be a smart choice. First and foremost, stocks have historically provided higher returns compared to other investment options, such as bonds or savings accounts. While there are risks involved, stocks offer the potential for significant growth over the long term. Another advantage is the power of compounding. When you invest in stocks and reinvest the dividends, your investment can grow exponentially over time. This means that even a small initial investment has the potential to turn into a substantial amount of wealth down the road. Investing in stocks also allows you to become a part owner of successful companies. You can support brands you believe in and benefit from their growth. Imagine being an early investor in companies like Amazon or Apple. Now that we understand the benefits, let's dive into how to invest in stocks as a beginner. The first step is to educate yourself. Learn the basics of stock market terminology, understand how stocks are traded, and familiarize yourself with different investment strategies. Knowledge is key to making informed investment decisions. Next, determine your investment goals and risk tolerance. Ask yourself, what are you investing for? Is it for retirement, a down payment on a house, or funding your children's education? Knowing your goals will help shape your investment strategy. Additionally, assess your risk tolerance. Are you comfortable with the potential ups and downs of the stock market, or do you prefer a more conservative approach? Once you have a clear understanding of your goals and risk tolerance, it's time to open a brokerage account. A brokerage account is an online platform that allows you to buy and sell stocks. Look for a reputable brokerage that offers user-friendly interfaces, educational resources, and low fees. There are platforms such as Webull, Robinhood, E-Trade, Thinkorswim and others. We will list a few recommendations in the description below, but ultimately, please do some research and choose the one that is right for you. Now comes the exciting part, choosing stocks to invest in. As a beginner, it's generally recommended to start with well-established, large-cap companies that have a track record of stability and growth. These companies are often referred to as blue-chip stocks. Research is crucial when selecting stocks. Look into a company's financial health, competitive position, management team, and growth prospects. Pay attention to their revenue, earnings, and any recent news or developments. Websites, financial news outlets, and company annual reports are great sources of information. Another approach is to consider index funds or exchange-traded funds, ETFs. These funds allow you to invest in a diversified portfolio of stocks that track a specific market index, such as the S&P 500. They provide instant diversification and can be a good option for beginners who want exposure to a broad range of stocks. As a beginner, it's important to build a well-diversified portfolio. Diversification spreads your risk by investing in a variety of stocks across different sectors. This way, if one stock underperforms, others may offset the losses. A good rule of thumb is to invest in at least 10 to 15 stocks from different industries. This helps ensure that your portfolio isn't overly concentrated in a single sector. Remember, diversification is key to managing risk. Finally, take a long-term approach to stock investing. The stock market can be volatile in the short term, but historically, it has rewarded long-term investors. Avoid the temptation of trying to time the market or chasing short-term gains. Instead, focus on buying quality stocks and holding them for the long haul. Regularly monitor your investments, but avoid making impulsive decisions based on short-term market fluctuations. Stick to your investment strategy and make adjustments only when necessary. And there you have it, your guide to investing in stocks as a beginner. Remember, investing in stocks requires patience, discipline, and continuous learning. Start small, diversify your portfolio, and stay focused on your long-term goals. Thanks for watching. Don't forget to like this video and subscribe to the channel so that we can continue to bring you great financial content. Happy investing, and we'll see you in the next video.